It's making it in the Bay Report, a bold prediction from one of the web's most respected real estate trackers. Zillow is now predicting that Bay Area home prices are about to fall.
What if I told you that the same cities people rushed into during the pandemic are now the ones where home prices might be cracking?
Tonight might be a bit easier to make it in the Bay, something we don't say often, a drop in home prices.
Yet many buyers are still not buying.
Yep. 2025 is shaping up to be a reset year for some of California's most popular markets, especially for cities that either attracted Bay Area buyers during the pandemic, like Stockton and Sacramento, or places that are now cooling off after years of sky-high prices like San Jose, Oakland, and San Francisco. Let's break this down. Hey, I'm Mac Rogers. I keep tabs on the local Bay Area real estate market and neighborhood trends so you can make confident decisions without second guessing. And today, I'm sharing 5 California cities where the housing market is shifting fast and what that means for buyers and sellers alike. Let's start with Stockton. Stockton was one of the hottest relocation spots during the pandemic. Bay Area buyers moved inland for more space, the flexibility of remote work, and more importantly, affordability. But in 2025, things are cooling off fast. Prices recently peaked at around $480,000, but they've already dipped by about 3%. Inventory is up 45% year over year, and homes are sitting longer, jumping from 27 to 44 days in the market. Nearly 38% of listings now have markdowns. That's almost double the national average. And while it's not a crash yet, there are early warning signs. And if you've been in real estate long enough, like I have, you remember how quickly things unraveled back in 2008. Stockton was ground zero during the mortgage meltdown. Home values dropped by over 50%. The city actually filed for bankruptcy. And while today's situation is different with stricter lending standard and less risky loan products, the setup still feels familiar. Rising mortgage rates around 7%. A shaky job market with unemployment above the state average. And fewer Bay Area buyers flooding in like they did in 2021 and 2022. Affordability is taking a serious hit, and younger buyers, many are simply waiting it out. So is this another crash in the making? It's too early to say for sure, but Stockton has always been one of California's most volatile markets. And if prices keep sliding, 2025 could be the year Stockton shifts from hot to not again. Now, let's talk about San Jose. The tech capital of Silicon Valley used to be unstoppable. But in 2025, it's definitely slowing down. Home prices recently hit $1.4 million, but they're already down between 1% to 2% this year. Not much, but inventory is up 35%, and homes that used to sell in under 10 days, they're now sitting for 35 days or more. And with layoffs at Google, Meta, and other major tech companies, buyer confidence is shrinking fast. A lot of people who once dreamed of buying in San Jose, they're now looking outside the area for better value, more space, and lower monthly payments. And speaking of monthly payments, a $1.4 million home with today's interest rates, that's over $9,200 per month with taxes and insurance. Even for well-paid tech workers, that's a tough number to swallow. Bidding wars are disappearing, and about 30% of listings are seeing price cuts. Now, will San Jose crash? Probably not. There's still a lot of wealth there and strong demand in certain neighborhoods like Evergreen, Almaden, and Willow Glen. But this is no longer a runaway market. This is a correction. And for buyers who've been waiting for leverage, it's finally here. Now let's move on to Oakland. Once the cooler, more affordable cousin to San Francisco, Oakland is now making headlines, but not for its trendy scene. This year, home prices dropped 6%, sliding from around 816 to 767 in the last 12 months. At the same time, rents are creeping back up, with the median one-bedroom now at $1,800, up 4% from a year ago. That's a sign the rental market remains tight even as buyers pull back. But here's where it gets serious. Public safety is becoming a major factor. Downtown Oakland, where Kaiser's corporate office and other major employers are located, they are raising alarm bells about employee safety and commuting. This isn't just rumors. Some Kaiser staff have voiced concerns about walking to and from work at night, which is impacting corporate decisions and office policies. Crime is high in areas like East and West Oakland, and that's clearly driving buyer hesitation. It's not just crime pushing people away. Businesses are too. Major chains like In-N-Out, Starbucks, and Denny's have pulled back citing safety concerns. By the way, this is the only time in In-N-Out's history where they closed the store. Never happened before. So picture this: dropping home values, rising rents, growing vacancy rates, safety anxiety. That's a toxic mix that can spook even resilient buyers. Inventory has surged nearly 50%. More homes for sale, and around 42% of listings now include price cuts. Homes that once drew 5 to 10 offers, they're receiving none. So what's the takeaway? Oakland isn't collapsing yet, but it's in a dramatic reset phase. Crime fears, even corporate level worries, economic uncertainty, and rising interest rates are cooling the market. If you're a buyer, there's opportunity, but it comes with risk. This isn't just a market correction, it's a turning point. Hey, by the way, if you're watching this and thinking, wait, is my city next? Hit that like button and drop a comment below. Tell me what you're seeing in your local market. I read and respond to every comment. And if you're in the Bay Area and wondering what this means for your home or your next move, call, text, or DM me anytime. I'll help you make sense of it all. All right, let's head to Sacramento. During the pandemic, Sacramento exploded. Bay Area buyers were flooding in, looking for space, better schools, and homes they could actually afford. Prices surged by nearly 40% between 2020 and 2022. But in 2025, that wave is starting to pull back. Median home prices have dropped, now hovering around $495,000. That's a 5 to 6% decline from the peak. And while that might not sound huge, in a price-sensitive market like this, it's significant. Inventory is up. Some neighborhoods have seen 25 to 60% increase in homes for sale compared to this time last year, and homes are sitting longer. What used to sell for under 2 weeks, now it's taking 3 to 5 weeks or more. And let's not forget, Sacramento is still one of the most searched relocation spots in the country. People are still moving here, but that fire hose of Bay Area migration we saw in 2021 and 2022, it's slowing down. Many of those early transplants are now watching the market soften. Some are renting instead of buying. Others are even selling and moving again. The uncertainty is real. Now here's what's really interesting. Sacramento is also going through a quiet transformation. The city recently passed zoning changes that allow for small multi-unit housing in formerly single-family neighborhoods. So we might start to see more inventory in the next few years, which could help stabilize prices. The bottom line, this isn't a collapse yet again. It's a cool down. But for buyers, it's finally a chance to breathe, negotiate, and maybe even win with less competition. That said, some suburbs like Elk Grove, Roseville, and Carmichael are still drawing serious interest, especially from Bay Area people who still want to stay close to home without the Bay Area price tag. Now let's head into the streets of San Francisco, the city by the Bay. Home to the world-famous bridges, steep hills, and until recently, steeper home prices. But in 2025, the shine is fading faster than the Golden Gate Bridge disappearing into the fog. Median home prices have dipped to around $1.1 million, down nearly $40,000 from last year. That's a 3.5% drop, and it's even steeper in certain fringe neighborhoods and condo-heavy areas. And while that might not sound like much in a city where million-dollar studios are normal, in real estate terms, it's a big deal, especially in a market that used to feel completely untouchable. Here's what's driving it. Tech layoffs continue to ripple through companies that once drove this market. Remote work is still a major factor. Many buyers no longer feel the need to live close to the office. And let's be real, affordability has hit a wall. A standard 20% down mortgage on a $1.1 million home, that still puts your monthly payment at around $7,500. That's before HOA fees, property taxes, or daily expenses. And by the way, some of those HOA fees are in the thousands. So buyers are hitting pause. Sellers are slashing prices. The result, inventory is up 40% or more and homes are sitting longer than we've seen in years. Even in once red-hot neighborhoods like Noe Valley, Bernal Heights, the Inner Sunset, they are seeing markdowns and longer times on the market. And here's where it gets more telling. Homes that used to get 10 plus offers, now they're sitting for 45 to 50 days, sometimes longer. And the people who left during the pandemic, many of them aren't coming back. They're living in Boise, Austin, Sacramento, the East Bay, where their $1 million can buy them a lot more than in San Francisco. Add in San Francisco's long-standing challenges, homelessness, street-level safety, transit delays, and business closures, and the market mood has shifted. The same thing, San Francisco hasn't crashed yet, but let's be clear, it's still a global hub with tons of appeal. But for the first time in a long time, real estate here feels negotiable. So what does all of this mean? If you're a buyer, this might finally be your chance to make a move. If you're a seller, you've got to be strategic. This market won't do the work for you anymore. So you know what to do. Call, text, DM me if you're thinking about making a move in the Bay Area or Sacramento or any of the markets I just talked about. And hey, if this video gave you something to think about, tap that like button, hit the subscribe, and drop your questions in the comment section below. I respond to each and every one of them. I'm Mac Rogers. I keep tabs on the local Bay Area real estate market and neighborhood trends so you can make informed decisions without second guessing. Thanks for watching, and I'll see you on the next one.